Hello everyone. Good morning to all. Thanks for joining today. My voice is audible to everyone.
Yeah,
Thank you. Yesterday we discussed about few concepts of stock market. If anyone missed to watch, here is the links are available in the chat box. You can check it. Let me ask you a quick question. Have you ever heard someone say I made money in stocks or market crashed today? Can anyone answer?
yeah, I've heard a few people say that.
Yeah.
Yeah, well, today we are going to break down all those confusions and doubts. By the end of the season, you will know exactly what stock market is, why people care so much about it. Yesterday we discussed about the business shop with your friends. You put all you all put in $1,000 each, making a total amount of $10,000 to start the business. You divided the ownership into 10 equal parts as a shares, and each of you gets one share. Business grows, right? After a while your pizza shop is worth $20,000. That means each share is now worth $2,000. Your investment has doubled. Now let's say one friend wants to tell say, sell his shares. He finds someone else who believes the business will grow even more and ready to buy that share for $2,000 also. This is what exactly happens in the stock market too. Big companies sell small part of their business called shares or stocks to raise their money. When you buy a stock, you became a part of owner of that company, just like you are in the pizza shop. Let's talk different types of this common types of the stocks. So now that we get what is the stocks is like owning a piece of pizza shop, right? Let's say that there are different types of shops, each behave differently, just like stocks also come in the different types, depends on how they perform, how risky they are, what kind of benefits they give. Let's say a common stock means here in simple way, these are the regular most common type of stocks. If you buy one, you own a slice of the company. You might get profits. Those are called dividends. If the company does well, and you can vote in the company decisions too. Example, buying Nike, Apple or Nika shares. You get ownership and chance for price growth. Here preferred stocks means actually simple example, these are like VIP stocks. You usually get the fixed dividends. Even if company isn't doing amazing performance, but you doesn't usually get the voting company meetings. Some big companies like Well Farmingo or JP Morgan may offer preferred stocks to invest looking for steady income, right? Here is the growth stocks means these are existing stocks, fast growing companies. They are usually doesn't give you any dividends because they keep the profits to grow even bigger. But if they succeed, your stock price can jump like crazy. Here value stocks means here for example growth stocks example Tesla, Amazon or Netflix. They focus on big companies growth like value stocks means here those old school restaurants that doesn't look fancy from the outside but they make amazing food and have loyal customers. People often ignorance but they are actually worth more than their current price. You are you are buying a stock that undervalued. It kind of like finding a good quality t-shirts in the clearance sale. Like I mean, stock market smart investors look at value stocks and think, hey, this company is solid. Just it just out of favorite right now. Let me buy it cheap and wait for the world to notice it again. Example Johnson and Johnson, Intel companies, General Motors. These are not trendy like Tesla or Netflix, but their financial growth and probable profitability and sometimes sold at the discounts also. So think of value stocks are hidden gems. You buy them when they are ignored and you smile later when their true value shows up. Here dividend stock means these are the stocks from calm company stable and calm companies that pay you little money every few months, kind of like pocket in the money just for owning this stock. Here examples like Coca-Cola, Johnson and Johnson paying regular dividends every month regularly. Blue chip stocks means like these are the big and solid well-known companies. They are safe players. They are being around for years and they consider reliable. Example Microsoft, Walmart, McDonald's, companies everyone knows and trust, right? Like that. And let's talk about company size in the stock market world. From babies to giants. In the stock market, companies are grouped by the size based on something called market capitalization. We call it as market cap for short term. Market cap is just a fancy way of saying here company total value is equal to stock price into number of shares. Now let us imagine the company is like people of different sizes. Nano nano means here it is a tiny baby, less than 50 million. Market cap is the size is less than 50 million. On we call it as nano cap. These are super tiny companies. They're like babies just starting out in the business world. Smart, cute, full of dreams, but also very risky. A startup in the biotech or a very small religion tech frame you never heard of would grow up to be something big or may struggle to serve. Here market cap is like turtles. Market cap is between 50 million to 300 million. a little bigger than nano companies. Still small and risky, but within a bit more structured. Small businesses with a working product, but not at the big legals. Kind of like a new food stuck in the lot of potential, but still not like McDonald's. Small cap is like teenagers. Market cap is between 300 million to 2 billion. These companies are growing full of energy and trying to make their mark, more stable than the tiny ones, but still volatile. Example, merged companies in tech companies in healthcare, like like a cool startup that opens in a fifth office. Like here, mid cap is like a adults. Mid cap is market cap 2 billion to 10 billion. These are stable businesses. They are not small anymore, but they are still growing faster. A nice balance between growth and stability. Example, imagine they are a company called Burger Planet. They started small 10 10 years ago with just one food truck. People loved it. Now they are going got 200 outlets across the US, good profits, and are planning to extend their Canada next year too. They are not good at household, named as like McDonald's, but they are also not a tiny startup anymore. Their total market cap is around 5 billion, which puts them in a market cap strategy, mid cap strategy, sorry. They are stable, still growing, and might one day become a large company if things go well. In real life, in real life, in US, mid cap companies would something like Gwall company is the one of the online real estate. DraftKings company is like sports betting. They are well known in the industries, but not at giants like Amazon, Apple. Large cap is like giants. Here is the market cap 10 billion or more or above for it. About 10 billion we call it as large cap. These are the big bosses of the stock market. Very stable, well known and global companies. Example, Amazon, Apple, Google, Coca-Cola. They are the kind of companies your parents also probably trust with their money. Cyclical versus non-cyclical stocks means here. These are the company cyclical means we call it as these are the companies that do well when economic is doing great, but suffer when the economic is slow down. Think of them like ice cream shop business blooms in the summer but lows down in the winter. Same with these companies, they rise and fall below how the economic is doing. Examples for cyclical stocks, car companies like Ford, General Motors. In traveling seasonal times, traveling companies like Delta Airlines, hotels like Starbucks. These are the cyclical stocks. Luxury items like Rolex, some people only prefer, right? Luxury items. People buy these when they have extra cash, but cut back during the tough times. Who is not talking can mute your mic, please. Non-cyclical stocks means here these are the defensive stocks. They are steady no matter what. These companies are that sell things people need no matter what, good time or bad time, like toothpaste, generic meds, groceries, medicines. Even in economic crashes, you will still need those. Example, grocery stores like Walmart and Costco. They are these are the general needs groceries, that is seasonal or without seasonal, they perform well. They are like raincoats. They protect your money during the bad weather. Penny stocks means these are the super cheaper stock, often under the $5. They are highly risky, but some people buy them hoping for huge profits. It's like finding a hidden gems or sometimes getting burned too easier. Example, small unknown companies you are never heard about it, not unlisted in the big stock market exchanges like NYSE or Nasdaq Q. Without any unlisted company, we never heard stocks. The unknown companies we heard in the penny stocks. International or foreign stocks means here. Imagine you like a chocolate brand from Switzerland or mobile from the South Korea. With international stocks, you can actually own a part of their companies, even if they are not based in your country. This is like just like investing outside your home. Example like Samsung from South Korea, Toyota from Japan, Nestle from Switzerland. RTITS means real estate investment trust. It is like a real estate gang. You and lot of people pool your money to invest in the properties like malls, apartments, or hospitals. Then you earn rental income and profits without having to buy a building yourself. Real estate is investing made simple. REITs is making a real estate is very simple in the market. ESG here means like doing good while investing in the sustainable stocks. ESG full form means here environmental, social governance. Environmental means here clean energy, low pollution stocks. Social means diversity, fair wages. Governance means good leadership and transparency. We call it as CSG, sustainable stocks, or they are popular investors among who want to their money to support ethical and sustainable or social responsible companies. These are the companies that are doing good for the planet, people, and ethics, like being social, eco-friendly, and well managed companies, and social responsibility. You invest in them because you care about more than just money. It's like saying I want money to grow, but not at the cost of planet. Speculative stocks means here highly risky and rewarding stocks. These are new industry startups and or unapproved technologies these are the wild cards. Think of them like lottery tickets. They might make you rich or might lose it also suddenly. People invest in this basically hopes based on their hopes and future potential, not current profits, right? This is they are gambling on the future, like a small biotech frame with the profitable cancer cure, or a new tech companies with a big idea. Here's particular to is equal to here we believe in it even if others doesn't see it yet. But be careful. These want to express the speculative stocks. Just I want to tell you is like not all the stocks are the same. Some are fast and risky, like a roller coaster. Growth roller coaster is example for growth of the stocks. Some are slowly and steadily like a bike ride as a dividend stocks, and some are like driving in a luxurious car as preferred stocks. This is the this is the only to know what type of fit you style. Are you still thrilly risky or not? This income is loved or not? Are safe players or not? We have to look into on it. That's what making investment fun. We build your own team of the stocks too. Here, here, stocks is the one we know already. This is the boss of the owning of money. Buying a stock is like buying a slice of business, like Apple or Nike. If any company doesn't does well, your slice become more valuable. But it can grow up or down, so you need to keep an eye on it. Bonds means it acts as a banker. It acts as a banker. Loans to company or governments. Think of it like you lend money to the government or big company, and they promise to pay you back with the interest. It's like being the bank. Not every exciting, but pretty safe. These are low risky stocks. These are very stable fixed returns. Depend on their governments and federal revenue policies also. Here ETF stocks means here exchange traded funds is like mixed mixed fruits basket, like basket of uh, multiple stocks or bonds. It is instead of picking one apple, you buy a whole basket of fruits. Like here, apple is the stock. Instead of buying of fruits, is a companies. Here, ETF is a company. ETFs are the great for people who doesn't want to stress over individual stocks and just want to follow the market. Here, mutual these are medium risk. diversification and passive investing. We can call it as SAP 500 also. Those are best for S&P 500 companies too. Mutual funds means this is like hiring a chef to cook a healthy meal with the best ingredients. It is like fully expected with handle. Fully experts will handle these stocks like professional managed stock collection. We can see in the mutual funds list. These are very low risk and medium risk. Hands of investing and manageable professionals. These are basically we can expertise can handle these lists. Here is the thing: understanding the concept stock market and exchange. Already we discussed is stock market is really so think that stock markets are huge online marketplace like kind of like Amazon. Instead of buying shopping of phones or shoes, people are buying and selling shares of the companies. These are very invested. These are wherever we need to invest from overall the world came to trade and take ownership in the business. Companies get listed in the those companies extend raise money from investors and in the return people can buy their stock. Some famous exchanges like NYSC, these are like big daddy of the stock market. Most of the old big or stable companies called blue chip stocks are listed here, like Coca-Cola, Walmart, etc. Here Nasdaq is focusing on tech stocks. This is the one of the modern and tech company. It is home to tech stocks like Apple, Amazon, Google. More growth and focused companies usually listed here. Other global market. There are also big companies in the other countries like the London Stocks Exchange, Tokyo Stock Exchange, etc. These are for trading international company stocks. List he, companies get and we can see the timings of the stock market. In the US doesn't follow all the time buy and sales. The US market runs it has specific seasons. Just like favorite cave that opens and closes at the fixed times, right? Here pre-market hours means this this is when the early bird starts trading. It's kind of like a wake up around their action. But not a lot of people, so prices are can jump around easily at 4 a.m. to 9:30 a.m. ET. These are the pre-market. Actually, trading happens here, not just orders placement. Liquidity is low here. Regular market means these are 9:30 a.m. to 4 p.m. ET. This is the main season. The market is fully open, and this is when most people trade. It's just like rush market for buying and selling. Normally, full and volume trades. And Usually this time only we can buy or sell any of the stock. After market means 4:30 p.m. to 8 p.m. Active trade continues of the after market too. Even after market closes, trade continues here. At the time, few more hours, big like we can see the big news of any companies or earnings reports releases often comes out here at that time. So we call it as after hours as 4 p.m. to 8 p.m. ET. From 8 p.m. to 4 p.m. the market is basically as you sleep. You can place orders, but they won't usually get filled until the pre-market starts again at 4 p.m. 4 p.m. onwards. So usually, just like a mall has opening and closing times, the stock market doesn't too. And depending on whether you trade, you might see different prices, volume, and reactions. Knowing when the stock is most active helps you more better trading decisions. Hope you are understand this topic. Harshad will continue next topic. Just 1 minute.
Yeah, thank you, Dean. Yeah. So, like, could anyone please tell, like, if they had, I mean, yesterday we had tried to discuss, why should we invest in the stock market, like, how stock market dominates all other means. And today we had discussed some basic topics of stock market. So, could anyone, at least raise a thumbs up if they are interested in the stock market, if they believe that okay, stock market can generate us wealth. Yeah. Yeah, thank you. But here there is a one trick. Obviously, the stock market will generate us wealth. Definitely, it will generate us wealth. But there is a small catch that the stock market only generate us the wealth when we invest in the good companies. Like in USA, there are approximately more than 7,500 plus companies. So, I mean, you can think once, like, uh, there are 7,500 plus options for you to invest in the stock market. But is there any guarantee that we will get profited in each and every one of those companies? Like, there will be some companies who will just list in the stock market just to loot money. There are some companies, like you may have listened somewhere, shell companies, you may have listened. Like there will be some companies, they don't do anything, they don't do any operations. They will just forge their documents, they will just forge their balance sheets, financial statements, everything, and they will, uh, they will enter into the stock market. There will be some companies who will enter into the stock market just to because to repay their loans. Repay their loans in the sense, let's say there is an XYZ company. That XYZ company has a 10,000 crore loans. 10,000 crore loans. Very huge loans. So to repay the loans, it will enter into stock market. Because if in stock market, some other, there will be so many people, right? So there are some millions of people in the world. Out of those millions, there will be someone who will invest in that company. So, and they will generate hype, very fake hype they will generate for that company. So, and again, in those companies, there is no guarantee that we will earn the profit. I mean, in the sense, there are 7,500 companies in the stock market, but there are only few companies which will generate us profit. Not every company will generate us the profit. I mean, just imagine, there are people who will cheat. I mean, in a society, I mean, if there is a group of 1,000 people in a one place, not everyone will be the same. There will be good people in those 1,000. There will be bad people in those 1,000. There will be people who want to cheat in those 1,000. There will be different kind of people. Same in the stock market. There are several companies, but on those several companies, not every company will generate us the profit. Then how do we find which company will generate us the profit? Which company will make us profitable? Which company is, uh, I mean, which company should we invest on? For that, there are two things. One is fundamental analysis and the other is technical analysis. So we need to do two things before investing in the stock market. One is fundamental analysis and the other is technical analysis. So after analyzing the after analyzing the fundamentals and technicals of a company, at least technicals if we kept aside, at least for the most important thing. Okay, even if we don't go into the technical part, but even if we, fundamental is the necessary, fundamental is the first and foremost, it is very necessary thing. I mean, even if we do the fundamental after performing the fundamentals of the company, then it is advisable to enter into the stock, because the fundamentals will tell us, okay, what the stock is, how it is looking, whether it is profitable or not, whether should we enter this company or not. So just in the sense, like, what is fundamental analysis? So fundamental analysis in the sense, analyzing a company. So let's say, just for the example, a few days back, Trump, I mean, you may have listening the recent news that Trump is announcing tariffs, reciprocal tariffs. He's announcing tariffs on various states. Recently, I mean, a couple of days back, Trump had announced tariffs on automobiles industry. And in the soon, Trump is going to announce tariffs on pharmaceuticals company. And on April 2nd, in the next weekend, Trump is going to apply reciprocal tariffs on all over the country. So here, like, if we check this, so what is happening due to this reciprocal tariffs? Uh, due to this reciprocal tariffs, uh, there will be some effect in the company. So these are the fundamentals. So fundamentals, what this fundamental tells us means how much the company is earning, how much profit the company is earning. It's like how much is the input and how much is the output. What is how much is the top line and how much is the bottom line. What is the top line? Top line means revenue. What is the revenue? Bottom line. What is the bottom line? Bottom line means net profit. Net profit in the sense, after deducting all taxes, depreciation, amortization, any debts, everything. So it's like a net profit. So in the sense, so just like in the sense, let's say if there are 10 people here, if you all are giving me, you are investing in my company. What does it mean? It means you are giving me your hard-earned money. So let's say here there are some 10 people. So every one of you had given me $1,000. Let's say, so every one of you had given me $1,000. So I got $10,000 in my hands. So now what I am doing what I am doing with this $10,000. This fundamental analysis will tell us. This fundamental analysis will tell us what I am doing with this $10,000, and how I am like how, I mean, where I am spending this $10,000, and from this $10,000, how much I am earning, and what is the forecast. Like in every quarter, it's not like it's happened just once a time. The business will go on. It will, I mean, it will happen again and again and again. So it's like a recycle. So how much I'm earning on the quarter basis. So this fundamental analysis will tell us. so just like and apart from that, this fundamental analysis will tell us how the management of the company is looking. I mean, because let's say you are giving company to the $10,000, it's very good. But the management of the cheaters, there is one cheater in the company. He's just I mean, he's not spending the money, the investment amount in the business. He's just using it for his personal purposes. I mean, the management, I mean, it happens, right? So if the management is not right, then there is no use in investing in that company. And it will talk about government policies. There are different government policies, just like previously, which I told Trump announcing tariffs. Due to this government policies, the companies will get affected. Like let's say tariffs in the sense, if tariffs came, it will be very negative for many of the companies. Why? Because the prices of the goods will increase. So, I mean, the prices of the goods will increase rapidly. What will happen when the prices of the goods will increase? The demand will get decreased. And the supply is I mean, there is a no shortage of supply, and the demand is getting decreased. And I mean, it's like a demand supply concept again. It is somewhat negative for the company. So this fundamental analysis will tells about everything, all of those things. Like in this fundamental analysis, we have quantitative analysis and qualitative analysis. As we had told, quantitative analysis, this fundamental analysis is divided into two types. One is quantitative analysis and the other is qualitative analysis. Quantitative analysis means company analysis. Company analysis means what? As we are told, financial statements, balance sheet, profit and loss account, cash flow statement. I mean, in easier words, which the exam which we had given earlier, that you 10 people had given me $10,000. How I am using those $10,000, where I am spending it, how much profit I am generating from those $10,000. And industry analysis. Industry analysis means overall industry. Like let's say if there is any negative news came, negative news in the sense, let's say if there is any war, okay, any I mean, let's say suddenly there is a news that okay, Russia Ukraine is going for a big war, or any Israel Hamas is going for a big war, or any attack happen on USA, then what will happen? Defense stock will start rising, because at that time defense will be the priority. I mean, the government main focus will be on defense at those times. So obviously the defense stock will get rising. And during this time, if we invest in defense stock, there is a high chance that we will earn profits. So it's like an industry analysis. And in the same thing, let's say if there is no war, everything is peace. I mean, everything is peace, everything is looking cool. Then there is no use of defense company. No use in the not in the sense like there is no hype for the defense company. So what will happen without any news? The defense company will, I mean, they behave normal. I mean, they don't rise that much. So again, like you may have, I mean, you may observe if there is any star movie company. I mean, if there is any star movie coming, like some Avengers or some Marvels related something movie, then you can observe the stocks related to entertainment will get rise so much. But if there is no movies, okay, if there is any normal thing, then those stocks will perform also in a normal way. So here what is happening, we need to observe the industry, which industry is trending in the market. I mean, which industry is trending in the market, and in that industry, we need to select the best company. So it is the industry analysis. And the third one is economy analysis. Economy analysis in the sense, as we had told Trump announcing tariffs, all these are the economy. All these are affecting overall economy. It's affecting overall USA economy, Canada economy, Mexico economy, India economy. Oh, I mean, except for China, most of the economy, these Trump tariffs are affecting. So all these are the economy analysis. So due to this, I mean, just imagine if you had done the company analysis, if you had done the industry analysis, and if you had done the economy analysis, and then we invest in any stock, there is a high probability that we will earn profit on those stocks. And the second thing is qualitative analysis. Qualitative analysis means simple management analysis. Management analysis means, as we are told, Okay, everything is perfect. Okay, company is perfect. Industry is top notch. Okay, industry, okay, it is trending all over the India. Economy is very perfect. But the management is fraud. The CEO of the company is fraud. The top management of the company is fraud. Still the company fails. I mean, let's say you had selected the best company, the best of the best company, but the management is not good. Then what's the use? There is no use in investing in the stock. So again, all this, I mean, uh, so we need to analyze all of these analysis, quantitative analysis and qualitative analysis. I mean, we will go deep in the next weekend if there is time. So, okay, let's say, okay, I mean, these are the, you can see, this is the format of balance sheet. Balance sheet in the sense, what is the assets the company have and what is the liabilities the company have. So, I mean, you can see how, I mean, in a word, it's like how much amount the company have and how it is spending, where it is spending. It's in a simple words. And again, profit and loss account, like from the amount which you had, from the amount which had taken by the investors, debts, in other ways, how much profit they are incurring. So it's just like that. Okay, so these are the fundamental analysis. And there is the other thing, technical analysis. So what is this technical analysis? So what is this So, okay, just imagine, is it really possible to do fundamental analysis? Okay, I will do company analysis. Okay, I will learn. Okay, I will learn myself, and I will do fundamental analysis. Okay, I will do company analysis. I will read. Okay, this is the balance sheet. This is the profit and loss account. Okay, this is the company statements. Okay, this company management is good. Okay, I had studied everything. But what about economy? Let's say I had studied everything is perfect. I invest in that company. Tomorrow, let's say Trump will say something. Trump will say that, okay, I'm announcing emergency just for the imagination. I'm announcing emergency in the state. Then the stock will fall. Or okay, I mean, some earthquake will comes, a big earthquake will comes just now. Yeah, just for the example, in Myanmar, Thailand, you may have listened, there is a very huge earthquake happening at present in the Myanmar, Thailand. What do you think? Now in Myanmar, Thailand, the stock market will rise or the stock market will fall at these times? The stock market will struggle. Okay, let's say I am living in Thailand. I had analyzed a company which is very good, which is perfect, which is a top-notch company, and I had invested in that company. After my investment, the earthquake had came, and that earthquake is not in my hands. But now the share price will fall. I will lose my money. So again, let's say someone had attacked the USA suddenly. Someone had thrown some bomb. Let's say no, North Korea had thrown some bomb, or China will had attacked some uh, attack on USA suddenly. Then what will happen? The USA stock market will crash. I mean, here what I'm telling is, okay, company analysis, I can do the company analysis. Doing the company analysis is in my hand, but doing the economy analysis is not in my hand. I can't able to do the economy analysis because I don't even know what will happen in the next second. How can I predict the future outcome? And the other thing, okay, let's say, and how can I judge the management? Okay, I will go to the company. I will personally meet with the management. I will personally meet with each and every person. I will personally talk with them. Still, how can I tell that he is a trustworthy? How can I tell I mean, he's an expert. I mean, maybe he's acting in before me. I mean, maybe like it happens, right? There are many people in survey, there are many surveys happen that the cheaters, the people who cheats us, they are the people who trust the most. People who trust the most will cheat us. Like many, there will be many quotations if you see. Then how can I judge the management? So judging the management, doing the economy analysis, industry analysis, all these are highly impossible. So So what does it mean? So in a word, doing the fundamental analysis is waste of time. No, it's not like that. It's just that I'm telling it's unpredictable. Anything can happen. In this, I mean, in this situation, technical analysis had came into picture. So technical analysis means what? It's a price action. It's a price action in the sense, let's say there are some institutions, Nvidia Corporation institution, Vanguard institution, BlackRock institution, Warren Buffett, you may have listened, and Mark Minervini. These are many huge people. I mean, they have very big institutions. So let's say, just like for the example, I'm in the exam hall, and I don't know what answer should I write to the question. I mean, I am in the exam hall. I need to answer the questions given on the question paper, but I don't know the answers. So what I can do at those times, I can simply copy what the what the student, what the other students are writing. I can simply copy from them, right? I can simply copy, okay, what the people, what the other students in the examination hall are writing. So in the stock market too, we are doing the same thing. There are many institutions, there are many hedge funds, there are many mutual funds, there are many huge HNIs, high net worth individuals. They invest in different stocks. So we select any of those people whom we believe, okay, these are the experts, and we just copy them. Just like how we copy in the examinations, we copy in the stock market. So why we are copying? So I am an individual, I am a normal person. It is very difficult for me to do economy analysis, to do industry analysis, even to do company analysis is difficult for me. Because let's say it's not that, okay, I'm entering the stock market, I have just to take a random stock, okay, it will become a top-notch company. It's not happen like that, right? To find the top company, to find the best company, I need to search a n number of companies. I need to search some 20 companies, some 30 companies, some 40 companies. Out of those companies, one or two will be, okay, this company is good to invest. Again, it is taking so much time for me. So instead of these, there are big institutions, there are many hedge funds. They are very, I mean, they are experts in those field. They are completely experts in this field. Just like Nvidia Corporation, the best example is, I mean, you may research if Nvidia Corporation invest in any stocks, it will get start rising so much. And Warren Buffett is the example. We can research like in Nancy Pelosi. There, I mean, you can research some Congress related people. They are very famous because what is happening, they research many things. I mean, Nancy Pelosi, she have the political connections. She know what will happen. I mean, what will happen in the general scenario. She has, I mean, they are experts. They have political connections. They know what is happening in the economy. They know everything. I mean, and more than everything, they are experts. So just if we copy them and invest in those companies, I mean, we may get benefited from their selections too. So this technical analysis will tells us the same. So I mean, when it is difficult for us to, I mean, as you can see here, fundamental analysis involves evaluating a company's financial statements, financial ratios, industry and sector outlook, management quality, government regulations and policies, currency, global market. So these are not in our hands, right? Currency in the sense, let's say tomorrow, the BRICS nations, you may have listened, the BRICS nations, what they are doing that, okay, we want to boycott dollar. We don't want to trade anything in dollar. We need to, I mean, we want to decrease our dependency on dollar. China is telling that we want to get rid of dollar. So there are many people who are thinking that, okay, we should not depend on USA so much. We should get rid of the dollar. So I mean, if such things happens, it will decrease the value of dollar, and in return, I mean, in turn, it will affect the stock market too. So all these are not in my hands. How can I do this? So it is not easy, even for analysts. But for large investors like institutional fund managers and hedge funds, They conduct deep research and their actions can influence price trends and volumes. That's where technical analysis comes in picture. Fundamental analysis tells you what stock to buy. Technical analysis will tell you when to buy or sell it. So technical analysis is the backbone of fundamental analysis. So like, hope you had understood the small introduction of fundamental analysis and technical analysis. So in a way, like, before, I mean, if you want to invest in any company, first of all, it is very advisable to do fundamental analysis on your own, because okay, I mean, as you are new now, it may be difficult for you to do, but as far as you gain experience, it will be easy, because the simple thing is, you, I mean, you know everything about yourself. The others will not know anything. I mean, you are the best choice for yourself. So, I mean, you know what you want. I mean, let's say there is some BlackRock corporation. It is an institution. And that institution will have some point of view. It will have some point of thinking. We don't know what does this institution want. But you know what you want, what is your risk, what is your point of view, how do you think, you know everything about yourself. So first of all, the uh, advisable thing is, we need to learn doing fundamental analysis of our own, and with addition to fundamental analysis, we can depend on the technical analysis in the sense, there are many people who will purchase stocks. I mean, in the stock market, you are not the only one person, right? There are some millions, crores of people who will invest in the stock market. So when such a large number of people coming in the stock market, it will create some price action. So it will create some price action in the sense what? Uh, Price action, some in the sense, some people will purchase, some people will sell. So everything, just for the example purpose, I mean, just randomly. So here you can see, I mean, you can see here the share Apple. It is the Apple company. As you're checking, I mean, here green. What is this green? This green indicates the people are purchasing the stock. The red indicates what? The people are selling the stock. Again, the green indicates the people is purchasing the stock. And I am telling, it is a day. Let's say I am keeping this into 1 second. Here, see, as you can see, I am keeping this as a 1 second. As you can see, 1 minute, I had kept this as a 1 minute. So what is happening in a minute, in a 1 minute, in last week, in 1 minute, what is happening? In 1 minute, I am talking. Someone had purchased Apple, and someone had purchased Apple, and someone had purchased Apple, someone had purchased Apple, someone had purchased Apple. But next, what happened? Someone has sold Apple shares. Because they sold Apple shares, it has started falling. So again, someone had purchased. Again, someone had sold. Someone had purchased. Someone had sold. Someone had purchased. Someone had sold. Someone had purchased. Someone had sold. And at the last, the people who had sold is high, and the people who had purchased are very low. So that's the reason why the share price is falling. So what is happening here? It's creating a price action. So it is a technical analysis. So what is happening? Let's say here, someone is purchasing. It may be anyone. It may be a large institution. Someone is purchasing and someone is selling. So as you can see here, someone had purchased. Someone had purchased at $218. You can see it's not a normal thing. Someone had purchased at 218, and they had started purchasing. So it had raised from 218 to 219.5. So it had raised to some $2 in a 1 minute. In what? In 1 minute, the stock had raised to $2. I mean, you can imagine, like in this 1 minute, if you had invested $2,000, you would have gained some $20 of profit. If you have invested $2 lakh in this 1 minute, your profit will be $2,000. Can you imagine? In just a 1 minute, your profit will be $2,000 if you had invested 2 lakhs. So it's like, I mean, it's a very big thing. Someone had invested here and it had raised to $2 within 1 minute. But on the next second, someone had sold everything. So again, it had felt some $2 approximately. I mean, $1. So at the end, it is creating some price action. So we need to study this price action. This is a technical analysis. Uh, so this is the thing I hope you had understood. We can go more further in on the next weekend. If anyone have any doubts, if anyone wants to ask anything, please proceed.